In this video, we're going to look at binary options versus Forex to help you decide what's right for you. I'm sure you're in the position at the moment where you're not sure if you should be trading binary options or Forex. I know I had the same questions when I was starting out, so here we go. So to begin with, it's best that we define what Forex is and what binary options is. So binary options is an all or nothing form of trading. It has a fixed return and a fixed loss. You place a put or a call on an asset such as Euro USD for a fixed amount of time, say for example a 5-minute trade, and if your guess is correct at the time of expiry, let's say 5 minutes from when you purchased it, then you will win the fixed payout. If it's wrong, then you lose your initial bet. So an example of a binary trade would be you select Australian US dollar, that expires in 5 minutes and it has a payout return of 1.85 or 85%. You purchase the option at $10 for a call as you think the price is going to increase. The price when you purchased Australian US dollar was at 0.80179, and after 5 minutes the option expires at 0.80180. So it's not only moved up a 1 micro point, but it doesn't really matter as you only need a tiny bit right to basically win that binary trade, which gives you back a profit of $8.50, which is pretty awesome for 5 minutes work. So Forex on the other hand is slightly more involved than binary. We're talking more specifically about spread betting on Forex here than just Forex in general. So with spread betting, you purchase a certain amount of that underlying asset to either sell or buy. When you sell the asset, you're hoping for the price to go down, and when you buy, you're hoping for the price to go up. You then make or lose money with each price point movement. So an example of a Forex trade would be you decide you think the asset you've chosen is going to go up in price. You decide to purchase a buy for Australian US dollar for $1 per pip. This means that for each pip that price moves up, you will earn $1, and for each pip the price moves down, you lose $1. So if the price of the Australian US dollar was 0.80179 when you purchased it, and then it ended up at 0.80189, then you would have made $1, as the pip is the fourth number. So in the number 0.80179, the number 7 is the pip. So the location which is the fourth number from the decimal point, essentially. So as you can see from the definitions above, binary is the simpler method to trade, but that doesn't mean that Forex hasn't got anything going for it either. So we're now going to look at the pros and cons of each method of trading. Risk factor. So in binary options, you know the total amount you're going to be risking. This is clearly stated when you purchase the option. So you know that if you purchase a call or a put for $10, then all you're going to lose is $10 if you're wrong. Nice, plain and simple. With Forex/spread betting, things continue to be a bit more complicated, unfortunately. So with Forex, you can lose an undetermined amount of money as you're essentially selling or buying the currency until you stop selling or buying that currency. So this could mean that if you want to sell a currency at $10 a pip, but the currency actually increases in price by 100 pips, then you would actually have lost $1,000, or you'd be negative $1,000. And there are ways to limit your risk with stop losses. So these are points where you say if the trade goes a fixed amount against me, then I want to close that trade, which are perfect, but unfortunately they're not 100% guaranteed, and that means that you could still lose a bit more than you were planning for, even though that is unlikely. However, the true risk with Forex is that you can lose more than your initial deposit. So if you have £1,000 in your Forex account, it's more than possible to have what is known as negative account balance. So if a trade you would open went really against you, you could end up owing the Forex or spread betting company more than £1,000 in your account. Now there are brokers that offer negative account protection though, so I'd highly recommend you look at those if you want to look at Forex. Or look at brokers that offer at least guaranteed stop losses. So profit factor, even though Forex is a big risk factor, it's also possible to make a lot of money out of Forex, as a single trade could be worth a lot more than a similar binary trade. So if we look at the same trade across platforms, it may be easier to see what I mean. So if we took an hour-long binary bet that gives us a return of 80% and we risked $10 on that trade and we won, then we would win $8.50 back in profit. We got the Australian US dollar at the 0.80073 for a call, and after the hour expired at 0.80170. And as we said before, we don't really care with binary options how much it expired in money, as long as it did. However, the numbers are important for the Forex example. So on the other hand, we had the Forex trade we entered into. Australian US dollar again, we purchased at the same price of 0.80073 for $10 a pip, and we decided to close it after the hour as well, where the price reached 0.80170. The same as the binary trade above. So we would have made actually $100 in the same trade versus the $8.50 we made in the binary trade. So now you could argue that you could have just increased your binary bet to $100 to make the same, and you could have, but you would have been risking a lot more on that trade. You could have easily taken that Forex trade with a really tight stop loss, so you would have only risked maybe $20 to make $100. Time factor. So the biggest problem for binary options that I see is the expiry time. It's because you're limited by the time of the option that expires. So after the option expires, you have to either be right or wrong. And the benefit of Forex in this case is that you're not limited by time at all. You can stay in the trade for as long as you like, or for as long as it's profitable at least. So an example, again, is probably easiest to explain this. So you enter the trade on the Australian US dollar for an hour binary bet. Unfortunately, after the hour, it expires out of the money and you've lost your money. You've lost the bet. Now, if we look at the same trade in Forex eyes, when we entered, we could have stayed in it as we're not limited by the amount of time. So we're not limited by the hour. The trade does go against us for a bit, which means we would have been in negative money at this time. But as you can see, a little later on, it shoots up and we would have been plus 20 pips in profit. So what's best? There's pros and cons to each of them. However, my suggestion would be it depends. And I know that's a bit of a cop-out, but it really does. I would suggest binary options for those that are getting started, as they are more beginner-friendly and the risk is limited and it allows you to get to grips with trading financial assets. The other bonus is that it helps to get you very accurate, as you need to start understanding how long it would take a market to react to something, as you need to get the binary trading times correct, which in essence would then help you get better times and entries if you then moved over to Forex or spread betting. So if you're more advanced or just want to try something different, or you have been trying binary options and you just can't get it to be profitable, then Forex could be a good option to try. Just remember to look for brokers that have guaranteed stop losses or negative account protection. So that's binary options versus Forex, and I hope you enjoyed the video. If you'd like to learn some price action and technical analysis for your Forex or binary trades, then you can check out my free ebook, 49 Candlestick Patterns Identified, 100% for free. And you can grab that PDF from the following link, 49patterns.tips.ninja, just type that in your browser, or you can grab it from the link below. Print it out and stick it on your desk while you look at the potential trades. So remember guys, if you enjoyed the video, please comment and subscribe below, and I'll be pumping out more and more content daily.